Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at a question many people are asking. We printed a particular type of bearish candle on the monthly time frame at the end of December last week. And the question many people are asking, has Bitcoin just printed the end of the bull market? We'll have a look at that. We'll slice it and dice it and analyze what its implications are and where we go from here. I'll also be having a close look at the 60-day cycle, as we seem to have started a new 60-day cycle, and see exactly what it means going forward. And as per usual, we'll have a look at what's in the news and look at exactly what's happening in the wider markets to make head or tail about Bitcoin in the short, medium and the long term. So if that sounds interesting, then without further ado, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, before I begin the usual analysis, I want to just remind people, and many people who have been following my channel will already be aware, that I don't make any predictions on this channel. I'm not in the business of being right or wrong, because this is a game of probabilities. There are no guarantees, there are no certainties, just possibilities. And through those possibilities, what I'm always doing is weighing up the probabilities of where Bitcoin is likely to go. And as I've said many times, I don't have a crystal ball, and neither does anybody else on the YouTube. Nobody knows what Bitcoin is definitely going to do in the next minute, never mind next day or next week or next month, or indeed at the end of this bull market. I don't even know what I'm going to have for lunch today, never mind what Bitcoin is going to do tomorrow. My intention here is very simply to just use whatever knowledge I have to read the charts and to give you my narrative, my insight based on my experience of the markets. And the clever ones here watching this video and all my videos will just take whatever value you can get out of it as part of your wider research. And then what you do with that, it's your business. This is not something that I want to keep reminding the subscribers here because it gets a little bit boring, because this is already covered in the disclaimer I show you at the beginning of every video, that this is not financial advice, and to urge everybody to do your wider research before you make any investment decisions or any swing trade decisions. Okay, we're going to go on to the main theme of the video, and that is to answer the question whether Bitcoin has just printed the end of the bull market with the monthly candle. So as I've just said, that there are no guarantees or certainties in these markets, and all we can do is to look at the probabilities of what's just happened. And this is the candle that people are referring to. This is a shooting star candle with a long wick at the top and a little body at the bottom here. And I mentioned this candle just before it closed last Monday and what it actually means in stock trading. And what we have is a definition here that a shooting star is a reversal candlestick pattern that forms after an uptrend. It has a small body with a long upper shadow and little to no lower shadow, indicating a potential trend reversal because of strong selling pressure. So based on that definition, what we can say is that we've had the uptrend, we've got this candle, and we should really see some sort of a reversal sign. However, as we've just said, that this is a game of probabilities, not certainties or guarantees, the probability of this playing out is what I want to really look at. The first thing is the momentum to the upside is definitely come to some sort of a halt or a slowing down with this particular candle. So certainly the strong momentum with these three big monthly candles, that momentum to the upside has certainly come to some sort of a halt here. So that's the first thing. But the most important thing I would always look at is actually the volume. So if we have a look at the volume, this is telling us a different picture. Firstly, this is around about the average volume of the last many months here. And this particular candle is actually showing less than the average volume. And when we come to the end of the bull markets, usually you get big, massive volumes which basically build up after a period of time. And this is what's happened previously. We built up this volume before topping out. And what we've got here is no extraordinary volume that would suggest anything like the topping of a bull market. So from the volume point of view, as well as the characteristics of that volume, this would not suggest that we've come to the end of the bull market. But having said that, we're obviously at the top of a trend with a bearish candle, which has stopped the upward momentum So what it really says, when you take a balanced view of the whole thing, is that more than likely, with a higher degree of probability, that this is going to be more of a sideways consolidation. So this is what it's signaling to me. And when we look at the 60-day cycle, that seems to confirm that this is most probably going to be the case. And I think what people got worried about was when you look left here and we topped out at the 64,000 and then the 69,000, and when we draw the trend line through those two peaks, it seems to have come to a bit of a conclusion here. So people got worried about the end of the bull market. But as I've just shown you, the characteristics of this does not seem to be backing that up. And before we go into the 60-day cycle and a deeper analysis into exactly what's happening with the cycles, we're going to have a look at the wider markets first to paint the background in which Bitcoin is operating in. And the first thing we see here is that Metaplanet is eyeing up a Bitcoin treasury holding of up to 10,000 Bitcoins in 2025. And this is just part of a narrative of many companies out there who seem to be wanting to acquire Bitcoin for their Bitcoin treasury as a hedge against inflation and the recession. So this would suggest one more time that the demand out there for Bitcoin should hold up and indeed increase during 2025. So once again, stories like this would not suggest that we've come to the end of the bull market. And if we have a look at the Bitcoin ETF overview to have a look at exactly what's happening with these ETFs to give us a broad picture of demand out there, and we saw last week that many of these figures here were in the red after a very strong period of accumulation into the ETFs. But since last week, what we're starting to see now is another healthy round of accumulation going on in the ETFs. So we're now getting a better, greener picture. So this seems to be now reversing back to the upside with an increased amount of demand over the last 7 days. And this is certainly feeding into a rising share price for Bitcoin. So when we look at the liquidation heat map, last week we looked at the lower range of the leverage players being around about the $94,000, and that's now risen to a low range now of around 98,700, and the upper range has also moved up to just over 100,000. So this is the range you would expect in the coming next few days. Okay, if we move on to the wider markets, just to have a look at exactly what's happening in the background before we make head or tail about Bitcoin and the 60-day cycle, to give us a big broad narrative of what's going on with Bitcoin. We want to have a look at the dollar first of all, and we know that the dollar has an inverse relation with the wider markets, and we've seen a very strong counter trend rally since the bottom over here, and we put this trend line at the 107 level. And it looked like with a higher probability it was going to come back down here. But what we've really got is some strength in the dollar based on the Federal Reserve and its chairman, Mr. Powell, expressing no real urge to be reducing the interest rates. So this obviously perked up the dollar. So what we've really got now is a little bit of a breakout here. And the question is this a proper breakout or is this a fake out? When we look down at the RSI here, well, we made a higher high on the weekly time frame. The RSI seems to not be reflecting the higher high here. So we have a bearish divergence, meaning that we're quite overbought with this chart and we should be expecting this to top out. So this looks like to me a false position for the dollar, and we should be expecting this to come back down over the next few weeks. And this seems to be confirmed also by the daily chart. And what we've got really there is a series of bear signals down here. And the bear signals are always given when there's a very strong divergence. So this bearish divergence has been going on all the way from back here, where we made series of higher highs on the price all the way along here and there as well, while at the same time we'll be making these bearish divergences all to the downside. And that seems to play out for the narrative that we've got, that 2025 is going to be the year of the bull market end. Whether that comes in the middle of 2025 or towards the end of 2025, certainly the dollar is gearing up to start sliding down and allowing the other markets to start moving up. If we move on to gold, what we can see is quite clearly a very bullish picture. In the RSI, we are above the 70, so we're obviously in a very healthy position here. And we know that once it goes above the 70, we can stay there for quite a while, where this level above the 70 can extend until the end of the bull market. So this is obviously now gearing up for an extended move during 2025. And what we're really seeing is a very healthy move from the bottom of the bear market here at the end of 2022. And we're seeing really a rapid rise over here. And in between, we've got very good structural corrections here. And currently, we seem to be going through another one of those before there's a continuation to the upside. And when we look at the weekly time frame, once again, it's giving us a very good clue that the current correction in the gold prices is really contained within this symmetrical triangle, which is a continuation pattern to the upside. So we would expect with a higher probability for this to break to the upside and the continuation of the bull market. And if we move on to silver, I just want to show you the really bigger picture view of the 12-month chart for silver, because it's developing into quite a bullish pattern, which I think everybody should be aware of, those people who are especially interested in silver. And that is that we've got this neckline at around about the $50 mark. If we just extend that, this is quite clearly a cup and handle pattern here. Clearly in this bull market, we've broken out of that handle part of it here and are going to be coming up and making some sort of a test of the $50 mark. So where we are currently at the $29, $30 mark, we should be coming to retest the 50 at least. The top of this was at around about 38 and the previous all-time high was at $49.78. So this is where silver is heading, towards the 50 mark. So when we come back down to the monthly time frame, what we can expect quite clearly here, that we're breaking out of this shorter term retesting of these higher levels here at around about the $30 mark. We're just waiting for a proper breakout here before the move to the 50 during 2025. And you never know, we could even go much higher than that. So these are the first targets anyway, but this is certainly the first target for 2025 to get to at least the 50 and see where it goes from there. And the RSI down here would certainly suggest we've got room to the upside coming up during 2025. Okay, moving on to the 60-day cycle, and what we've been doing here is looking at this particular candle, which is called a long-legged doji candle with a long wick at the top and a long wick at the bottom. It's what we call an indecision candle, but it does have the Harry Potter magic powers, because when you look at the top of this range, which is at 104,000, and the lower range, which is 92,000, and we've been following this particular candle since it printed on the 5th of December, and we drew the top of the range with these green lines, and so far this particular candle has been conducting the price action of Bitcoin within its range all the way here. So very important to make sure we understand that this particular candle has been incredibly powerful, especially when we look at the volume of this candle, which was giving away a very strong clue that there is going to be some sort of a consolidation pattern within the range of the 104 and the 92,000. So we can see quite clearly with this particular candle here, we can see the huge volume that came in. So there was a huge amount of buying and selling in this range where neither the bulls nor the bears came out on top. So that indecision has now been reflected with the sideways consolidation that we've got since the 5th of December. That's over a month ago now. And as I showed you earlier on in the program, the monthly shooting star candle is also putting bearish pressure on the price, which would suggest that we may have a lot more of a consolidation pattern to go for at least the next cycle from where we are currently. So in terms of the cycles, how they're fitting in with this particular narrative of this continued consolidation we're getting, we seem to have made a tentative bottom of the cycle on day 56 with this particular candle here. And I mentioned this particular candle last week, which is the Dragonfly Doji candle, which has the power to move the market to the upside. And this is where we got the bounce. But what we needed to do was to clear the previous candle, the high of which I mentioned last week of 102,747. So we didn't manage to clear that, and we came all the way back down to retest the 92,000 here. And often what happens when you get a Dragonfly Doji candle on the bottom of a trend, or a Gravestone Doji candle at the top of a trend, sometimes you get a run up on the wick of those candles. And this is what happened here. We got a run all the way down to the bottom of this candle, but we didn't close below it, although we did actually protrude below it, which gave us our day 56 tentative bottom. So this is where we're at the moment, at day 56, cycle low. So we can now move this red line from the original 60 days, which we were expecting on the 3rd, to now the day 56 end. And this tentative cycle bottom was confirmed when we closed above this particular candle, which was on the 30th of December. We closed that on the 2nd, on Thursday last week. And since then, we are now testing the top of this particular range. And if you watched my video last week, I mentioned this head and shoulders pattern, which was playing out. So in order to invalidate that at the 92,000 neckline, we really need to go above the height of that right shoulder. And that's on this particular candle, the high of which is at 99,881. So we need a close above that, which would allow the price to go back up to the long-legged doji range, which is at the 104 on the upside here. So this is where we're expecting for the price. If we can get above this 99,000, the next target would be 104,000 here. And if we just have a look at what's happened in the last few cycles, as we saw with the monthly gravestone doji candle, it looks highly improbable that we're going to break out above the 108,000. So we could come up to and test it, but it looks highly improbable based on the monthly bearish candle to break above that 108,000 here during the current cycle, which will end around about the end of February. So between now and the end of February, I don't see, with the way the price action is going, it does not look with a high probability that we're going to break above it. And if we do, it will probably be a fake out rather than a proper breakout for much higher prices. So obviously everything is possible. I'm not saying it can't happen, but the probabilities are on the side of this range here, continuing until the current cycle ends at the end of February. And if you look at the previous cycles, what we've got here is that we had a left translated cycle back in July where we made a new high here and made a lower high instead. But since then, from the breakout of the 49,000, so since we bottomed out at 49,000, the following cycle made a right translated cycle here, and the cycle that's just finished made another right translated cycle here. So we've had two right translated cycles, and obviously it's possible to make a third one, but what it does is it makes a left translated cycle a reasonable probability here, just based on what I've showed you with the long-legged doji candle. Secondly, the fact that we didn't break out and the fact that we didn't break down with this head and shoulders pattern, and normally you would expect at the end of a 60-day cycle, and what you would normally get, as I showed you last week, when you get to the end of the cycles, you do get a big sell-off at the end of each of the cycles here. You can see quite clearly you do get a nice big shakeout, but this time we only went down to this level here, and we would have expected a bigger move to the downside, which didn't happen. And what we normally call that is a price action based correction for sentiment. So if the sentiment isn't going to correct by the end of the cycle, flurry to the downside, then what that really does is to signal that we're more than likely going to make that correction of sentiment, i.e. an elongated time period of sideways price action to take the sentiment out of the market. So where does the price go from currently where we are at around about the 99,000? So we have the inauguration of the new US administration coming in on the 20th of January. So when we put that line in here, it gives us a template to work on in terms of the narrative developing. So with the new administration being pro-crypto, so when we put on the inauguration date here on the 20th, how do we see this price action developing? So the narrative here would be quite clearly that having made a new 60-day cycle low on day 56, we can expect a rising market into the inauguration date. Whether that goes up to the 104,000 or up to the 108,000, it looks like it's going to become a sell the news event around about here. And that would fit in quite nicely with the mid-cycle correction that we would normally get, where that's going to be maybe back to the shoulder here at around the 100,000 before a big move into the 60-day cycle. Whether that goes up to 108, we don't know. But this is where you would expect the new cycle to begin. And this is where I would expect from February onwards to start making inroads into and retesting the 108 and even to break out here rather than at this point. So having failed to break the 92,000 and printing a bearish monthly candle, and this long-legged doji still conducting all the subsequent candles here, all of that on balance gives the impression that we are embraced for much more of a consolidation within these certain ranges, certainly from 108 down to the 92. So this would be another point that we could come back and retest somewhere in this range here between now and the end of February. So this is what I'm expecting. The narrative is for much more consolidation in this range up to the end of February, with a mid-cycle fall around about the 20th of January, which would coincide with the inauguration of the new US administration. Now, of course, that doesn't mean that we can't break above the 108. The probability is about 20%. And if we do break above that, then that gives you a different narrative, which is that there is so much demand out there, and we know that with the ETFs, we know that with the various numbers of companies trying to use Bitcoin as a treasury hold against recession, against inflation. So the break above the 108 isn't out of the realms of possibility, and it may well signal, if that happens, whether we could get an early end of the bull market towards the middle of 2025 rather than at the end of 2025. So let's see how this plays out, but certainly a lot of interesting developments going on here. And also we want to check what's happening with the pi cycle indicator for the end of the bull market, and this is quite clearly showing that with the green line of the pi cycle and the red line of the pi cycle, where we would expect at the end of the bull market for the green line to cross above the red line or to come quite close to it. These are well far apart. So quite clearly, one of our main indicators for the end of the bull market is clearly signaling that we are nowhere near it at the moment. But if you look at the trajectory of the green line, we can see quite clearly it's moving up very, very fast. And if the price keeps moving up quicker than we expect, then this line is going to cross the red line much earlier than we are expecting, which could be around the middle of 2025 rather than the end of 2025. So what that really means is that a period of consolidation would allow the green line to elongate much further before crossing the red line. So all interesting stuff. So this is my narrative. As I mentioned at the beginning of the video, there are no guarantees or certainties in this market. We're just looking at the charts and building up a narrative of the best pathway for Bitcoin in the coming weeks and months. For those of you who are interested in our portfolio that we run with the private member section here with the Bitcoin miners, at the close of play on Friday, this is now up 21% from the beginning of 2024, but this portfolio started at the beginning of 2023 from the bottom of the bear market. From the start of the current bull market, we caught it right at the bottom with a starting capital of 100,000, which is now built up to 527,000, and our target for the end of this bull market is 5 million, which really means that for the Bitcoin miners, we're expecting a 10x from where we are currently. And that target may look pretty wild for those people who are not familiar with the Bitcoin miners. And if we have a look at one of the miners and compare with what happened in the previous cycle to what we would expect, hopefully currently in the current cycle, it doesn't mean it has to repeat, but certainly we know that the markets do rhyme with what's happened in the past. And so far, since the end of the previous bear market at the end of 2022 and the beginning of the new bull market here, what we've got was a mixed picture, because in 2023, from the bottom of the bear market here to the end of 2023, we had Marathon Digital Holdings going up by 853%. So quite clearly, this major miner outperformed Bitcoin, which in the same period had gone up by 190% from the bottom of the bear market at 15,400. So while Marathon went up by 800%, Bitcoin had gone up by 190%. So there was a leverage play for the Bitcoin miners in 2023. But as has been very well documented, the Bitcoin miners have not performed very well during 2024. So we can see this is the end of last year. And since then, the current prices are around about 15% lower at the beginning of 2025 than they were at the beginning of 2024. So while we did go a little bit higher, for the majority of 2024, as we can see quite clearly here, we've been really suffering very badly with the Bitcoin miners. And the million-dollar question is, what will the miners do during 2025? Will we continue with the sideways motion, or will we have a big move out to the upside? Now, if we study what happened in the previous cycle, just after the halving, Marathon Digital Holdings was not a Bitcoin miner until it got to August 2020. So instead, if we have a look at Riot Platforms, which was one of the other major miners, which was mining Bitcoins at the time, we can see quite clearly here that we had a series of corrections with that of nearly 50% before the parabolic move came. And this occurred twice after the halving. and this one was nearly 40%. So you got two very big moves, two very big corrections before the eventual blow off top. And if you look at the eventual blow off top for Marathon, when it did become a Bitcoin miner, which was around here, if you take it from there, that actually increased in the last phase of the bull market by 39x to where it topped off at $83 from down here where it was at $2. And since the halving, this yellow line here, Riot Platforms once again have had two corrections, one at 51% and the current one that the miners have been going through of around nearly 40%. So once again, very similarly, after the halving, Riot Platforms has gone through two corrections. So will it do what it did in the last cycle and go this way? And as I said, nobody has a crystal ball. All we can do is to look at the patterns before and make a value judgment in terms of a projection into the future. And I always come back to this particular quotation from H. Jackson Brown Jr. when he said that nothing is more expensive than a missed opportunity. So if you see the Bitcoin miners as a great opportunity, like most of us at the private members section where we cover the Bitcoin miners, then this may well be a great opportunity to get in, because if you look at the correction that we've got so far, and we have a look at Marathon, since the end of November here, where it topped out at $30, the current price, as you can see, we're just getting another green candle now and coming back up from these support lines on this white line. The current price still represents a 35% correction from the end of November. So this may well be a great opportunity to get in after a nice big correction here. But I do want to warn people that the Bitcoin miners is very much a wild ride. It's a highly volatile market. While Bitcoin comes down by 15, 20 and 30%, these Bitcoin miners so far, since the end of the bear market here and the start of a new bull market, we've had corrections so far of 63% during 2023. This one here was at 53%. The next one, 58%. And another one here of another 52%. And of course, the current one altogether was actually at 45%. So you can see this is very much a highly volatile, high risk, high reward play. No one can guarantee what this is going to do, whether it's going to go up much further, just like it did over here. This is what we're hoping in the private member section. And certainly if Bitcoin does produce the numbers that we want, i.e. going up to 170, 200,000, 250,000, or wherever it goes to. Nobody knows where the Bitcoin price is going to end. But certainly as Bitcoin goes much higher, we would expect more of a higher move for the Bitcoin miners. So please be aware of the wild ride here, and I wouldn't want to be encouraging anybody who can't stomach 30, 40, 50% corrections. If you don't like the volatility, then I would not expect anybody to join the Bitcoin miners section. But if you are interested in that opportunity, then below any of my videos here, there's a join button. And if you're on a handset, this join button may not be showing. So if you go into the description box instead, you'll see this red button here, the Bitcoin Miners membership join link. Then for the price of a coffee per week, which translates into £12.99 per month, we do 2 dedicated videos for the Bitcoin miners covering Bitcoin and the Bitcoin miners on a Wednesday and a Friday. So it also gives you the opportunity to catch up with the Bitcoin analysis during the week on a Wednesday and a Friday, as well as looking at the ratio trades that we do with the trading portfolio that I've just shown you. Then on a daily basis, Monday to Friday, we do these market updates at the end of each trading session, Monday to Friday, which keeps us all up to date with Bitcoin and the Bitcoin miners on a daily basis. And if there are any ratio trades that we can identify on the charts, then these are also posted here as well, with any particular charts and with any articles relevant and important to Bitcoin and the Bitcoin miners. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.